Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
Your second year in Japan, your paycheck can shrink even after a raise, and it has nothing to do with your employer. It's a tax bill almost nobody warns new arrivals about, because in year one, it doesn't exist at all. New series starting here, taxes. After 4 videos on visas and residency, we're moving to the bills that catch foreign residents off guard once you're actually living and earning in Japan. Resident tax, Juminzei, is assessed to whoever holds residence as of January 1st, based entirely on the income you earned the previous calendar year. Not this year's income. Last year's. That single design choice creates the whole surprise. Arrive partway through the year, and on January 1st of your first year you have 0 prior year Japanese income to tax. Your resident tax bill is 0 yen. Year 2 is different. Starting in June, a bill shows up based on everything you earned during that first year, money you've likely already spent, saved, or sent home. This isn't a foreigner-specific rule or a penalty. Every resident of Japan pays on a 1-year lag. It just lands differently on someone who had no idea year 1 was a tax-free preview of what year 2 actually costs. Don't confuse this with national income tax, which is a completely separate deduction already coming out of your very first paycheck on a pay-as-you-go basis. Resident tax is the one that's silent in year 1 and loud in year 2. The two systems run on opposite timelines. This money doesn't vanish into a national budget. It funds the specific ward or city you're registered in, garbage collection, local schools, roads, and municipal services. It's genuinely local, which is also why the amount varies slightly by municipality. The bulk of the bill is the income-based portion, a flat 10% of your taxable income, 6% to your municipality, 4% to your prefecture. On top of that sits a flat per capita charge, 5,000 yen, about $31 a year, which includes a 1,000 yen National Forest Environment Tax added in 2024. Everyone pays this flat portion regardless of income. If you're a salaried employee, your company almost certainly handles this through special collection. The bill is split into 12 equal pieces and quietly deducted from your paycheck every month from June through the following May. Without an employer withholding it for you, you get an ordinary collection notice around mid-June, payable in 4 installments, June, August, October, and January of the following year. One more quirk worth knowing, your resident tax goes entirely to whichever municipality you lived in on January 1st, even if you move to a completely different city on January 2nd. Where you live for the other 364 days doesn't matter to this bill. This is also why the popular Furusato Nozei, hometown donation program, redirecting part of your resident tax to a municipality of your choice in exchange for local gifts, doesn't help brand new arrivals in year 1. There's no resident tax base yet to redirect any of. The rate applies to taxable income, not your gross salary, an employment income deduction, a basic deduction, and your social insurance premiums all get subtracted first. That's why the real bill is meaningfully smaller than simply taking 10% of your paycheck. If you're self-employed or freelancing instead of salaried, there's no employer quietly splitting this into 12 painless pieces for you. The full ordinary collection bill lands as 4 real payments, and nothing about your monthly cash flow forces you to set money aside for it in advance. Concretely, someone earning 4 million yen, about $24,691, in their first full year of Japanese salary. Illustrative numbers only, but a realistic ballpark for that income puts your 2's resident tax around 150,000 yen to 220,000 yen for the year, roughly 12,500 yen to 18,333 yen quietly disappearing from every single paycheck. Get a raise that same year, and the math gets genuinely counterintuitive. Your gross pay goes up, but your take-home can still drop, because the new deduction is sized for last year's income landing on top of this year's, 2 separate years of earnings both hitting your bank account's bottom line at once. Here's the part that catches people even more off guard: leaving Japan doesn't automatically close this out. The system has a specific, fairly aggressive answer for people who exit before they've finished paying. Leave your job or the country between January and May, and whatever's left unpaid for that tax year gets pulled from your final paycheck in one lump sum, automatically, under Local Tax Act Article 321-5, Paragraph 2. If your final paycheck isn't enough to cover it, or a fresh bill gets issued after you've already left the country, you're required to either pay the full balance before departure or formally appoint a nosy ikan tax administrator, someone in Japan authorized to receive your mail and pay on your behalf. This can be a friend, a family member still in Japan, an accountant, or in some cases your employer's HR department. And because of the January 1st residency rule, it's possible to owe an entirely new year's resident tax bill after you've already flown home. If you were still a resident on that date, that year's tax follows you regardless of where you live when the bill actually arrives. A departure in February, for instance, still leaves you fully liable for that whole tax year. Ignoring the notice entirely isn't a real option. Unpaid resident tax accrues late payment interest on top of the original bill, and municipalities in Japan have real enforcement power. Persistent non-payment can escalate all the way to wage or bank account seizure, the same as any other local tax debt. This affects every new arrival on a salary here, anyone budgeting month to month without expecting a second-year deduction, freelancers with no employer to withhold anything automatically, and especially anyone planning to leave Japan for a new job or back home without first checking what they still owe. Practical steps: set aside part of your first year's income specifically for the Year 2 bill instead of treating it as extra cash. Ask your ward or city office directly for a personal estimate before you plan a big move. Appoint a tax administrator before departure if there's any chance a bill will still be outstanding. And if you're freelancing, budget the ordinary collection installments into your calendar the same way you'd budget rent. Next in this series, what happens when a non-resident landlord files rental income tax on a property they own in Japan? Year 1 isn't a discount, it's a 1-year delay. The bill for living and earning in Japan always arrives, just 12 months later than most new arrivals expect, funded entirely by income you've already earned and likely already spent, and it keeps following you even after you've left the country. Quick recap: Year 1 resident tax 0 yen, income-based rate 10%, flat per capita charge 5,000 yen, billing starts June of Year 2. That's the bill almost nobody warns new arrivals about. Subscribe for the rest of this tax series, and for more data-driven breakdowns of life and investing in Japan.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.